Today is Monday, October the 21st, and I think if you bear with me, you're going to see some interesting things with Apple, Caterpillar, and yes, SPX vis-a-vis the charts. But let's take a look first at the mini futures, and you can see that at the open, right here at 9:30, we dipped a bit, but then we went up and we tested the Globex high. The Globex high was made at 8:40 in the morning, tested the Globex high, couldn't really break away from it, couldn't get two consistent candles break, so we failed. Came back to test again, got one successful candle over, two successful candles over, and then this doji pulled back, and then that third test, off we went, and we kept going higher. So the advancers led decliners by quite a bit, a ratio of 2 to 1. So that is going to take the stock market breadth now back charging up again towards the overbought area. So that's what we are looking for now, for money to keep moving into the market, particularly as the week goes on and companies are reporting positive earnings. As long as that happens, we're going to continue to see money moving into the market. Let's go to the charts now. Here's what's interesting about the S&P. Do you remember on Friday, we said that we were going to look for the importance of this candle and the Chiku span? And look where the Chiku span ended. It ended the day, price ended the day right here, so therefore the Chiku span ended the day right here, which is exactly under that candle. That bodes for resistance, but look at where support is. It's right back here at 29.97. Now we've broken over 3,000, so it's not going to be unreasonable to think tomorrow that we test the 3,000 again by coming back to resting at 29.98, which is where the Chiku span will be on top of this candle and then moving higher. So that's what I think the Ichimoku traders and the algorithms that feed off of the Chiku span are going to be doing. We should be able to see a test tomorrow just under 3,000, and then the buyers step in and the Chiku span will end up strong above these candles and can keep on moving. Apple. What I noticed about Apple, other than this huge $4.17, 1.8% day when the market was only up 0.7%, is we've broken convincingly out of this channel now. And we've popped over that 100% Fibonacci, which was the previous high, right here back in September of 2018. So 1 year ago. It's taken us 1 year to get back to where we were in September of last year. I wondered what was important about this point right here. Why did it bounce here? So I wanted to do some studies and see which Fibonacci's fit to call for a bounce there. And if we could find a Fibonacci fit, what did it call for on the upside? So I went to a weekly chart and I took as my basis 2,000, because we really were quite flat and the stock wasn't trading for very much back then, $3-4. But we really only started to move in 2005. But if you take this as your starting Fibonacci and this as your top, we pulled back to 38.2%. and then resume the move up. So we did test that Fibonacci. So now if we take those same 2 points and we extend and we say, and that was the blue one here was our pullback. Now we're going to look at extend, and that's the red one, where the red becomes the green one becomes 100%, and we're using down here is 0%. What's the next stop? The next Fibonacci, and it's not a strong one, but it's 114.6%. It's $247. A slightly stronger one a definitely stronger one is 27.2%, $258. And then 268, which would be 38.2%, which coincidentally fits with an Elliott wave pattern that would terminate a major leg right here. And those legs are from here to here is one wave. And then you have, these are automatically drawn by motive wave. And this is a super cycle. Pulled back here to number 2. The third one is always your biggest one. And they're calling for the third one up here. Not here, but here. And that would be the 138.2%. Now, it may take a long time to get there. And remember that earnings are next week. I believe it's Tuesday. So, really, there's a good chance that we continue to build strength and momentum into earnings next week, which is on the 30th. So, October the 30th. Don't know what day of the week that is. So that I think is interesting. There's our next targets. It doesn't mean we can't come down and test 233.7 to look for support. Let's see what kind of volume we've been getting. Let's show some volumes. This is a weekly chart. So these are our weekly volumes. And for the last week was below the 20-week moving average. Then we had 2 that were above. Let's go to the daily now and let's see what kind of volume we had today. Below average. So we're up $4, but that was below average volume. So industrial people, the big guys are not necessarily playing, but there's a lot of small people that are driving up the volume. The last time we saw the big investors who could push us over the 20-day moving average for volume was back on October the 11th. So I'm still calling for this upward motion for Apple. Not to say that we couldn't see some of this where we come back and do a test of the 100% value to make sure that there's still buyers there. Caterpillar. Caterpillar, very interesting. Where did it see its peak today? On this trend line. We watched this trend line a long time. We watched it back from January of 2018. It hit here, it hit here, it hit here, 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 and here we are again. An important trend line hitting what, 6, 7 times, and then moving back. I still think Caterpillar has some strength if Trump is right, and there is going to be a phase 1 deal written up at the middle of November. Then Caterpillar is destined for 140 to test this long time gap. But look at the volume. We've had 3 days now where volume either met or exceeded the 20-day rolling average for volume. Let's go to Amazon, because Amazon has something important to show us too. And that's that it's playing in between all of these moving average, 50 SMA, 50 EMA, 200 EMA, 200 SMA. But it's the cloud that's most important, and it's the cloud that was acting as resistance. Sellers were ahead of the cloud and drove us down on Thursday, drove us down a bit more on Friday to find support on the 8 EMA. The 8 EMA was nearly tested again today, and we ended up where? Just below the 200 EMA. So the cloud is going to be resistance, and that resistance is pretty constant. If you look at this, it doesn't get any easier until you move into November, towards Black Friday, when resistance gets a little bit easier. So I think we're going up, but not before we do a lot more of this sideways motion and testing of the cloud. And then once we're in the cloud, I believe we drift in the cloud as we typically do, possibly getting pulled up to this flat portion of the cloud, but there isn't much time left in that. October 20th to October 29th. So we've only got 10 days left of that flat cloud to attract. I don't think it's going to be very attractive. Look how important the cloud has been in the past. The cloud has been really, really important for Amazon as points of support as well as points of resistance. So keep that in mind if you're playing Amazon. I'm not. Now is not the time to be going long or short on Amazon, but I think the time is soon approaching to be going long. Google said it would be going up. It did. Now we've pulled back a little bit. We may come back to test the 8 EMA. Don't know when Google's earnings are. Let's take a look because it's important. See if I can find it quickly. Is there an earnings date here? No, there isn't. So I'd have to go into Dividend Investor and find out when Google are reporting, but you should do that. So that's it for today. Where are we going tomorrow? Just to summarize, I think market momentum, the money, is still for upwards, but watch this Chico span where we open tomorrow. If we open down, then we go down just below 3,000 and test and look for support. So let's just put our alert right there. When price touches that value, we're going to be looking for support.